It's market day report. Glad you're with us, working our way through midday and racing towards a finish line. By the way, we're getting closer every day to that prospective plantings report from USDA. That hits next Tuesday, 12 p.m. Eastern. We'll also get a quarterly grain stocks report from USDA. A couple of reports could be market movers. All right, let's see how the market's moving. Right now, the corn market is still in higher territory. Look at the December. We're tick off the day's high at 491.5. It's up 2.5. And so we're seeing some excitement coming into the market. 501.25 on that March contract. Could it be related to biofuels? Well, maybe. Look where we're trading the bean market right now. Tick off the day's high, 1164.25 on the May. The old crop is up 9, and we're at 1150, within a penny of the day's high on the November. That's up 6.25. Here in the complex, we're watching soy meal contracts still in the red for the fourth straight session, and for the fourth straight session, bean oil continues to rally. The big winner right now looks to be that May contract, trading at 67 cents, and it's trading in over a $2 or a 2-cent trade range here. It's up 127. Wheat market here, Chicago, July up 1.75, 603.75. Hard red up 6.5, 626.25. Spring wheat, we're higher across the board. And cotton, new crop, D's, 72.43, up 15. Chris Robinson's with Robinson Ag Marketing. Nice little rally here with the beans. Looks like we're being led, though, by bean oil. Are you watching it?
Yeah, bean oil's got a 33-month high. We've had a tremendous rally from, it started about 4 months ago when we started getting an inkling they were going to do a redo on the RINs. And that's going to come out the 27th, supposedly. That's going to be the new updates on the blending and so on and so forth. So that may already be factored in, Tony. That's the one thing. This may be a buy the rumor, sell the fact. Bean oil has led us all the way up. It was the one thing that's been screaming higher. Yeah, you put up that chart, I can see. I mean, it's had a tremendous recovery. So at this point, you know, what's going to happen? Everybody's already long. When they put the news out officially on the 27th, you know, you may get a little actually profit taking. So it's been one of the drivers. The biggest driver, though, has been the crude oil rally from $50, $55 to, you know, we're back to $90 here today. And I think that's really what's going on. All this money has poured into the long side in the row crops, in the grains, even in the wheat. And they flipped from being short earlier in the year to long. They're long everything now. So as long as crude oil stays up here, that's going to be a good bet. If and when crude oil gets back to normal, that's when I would be worried if I was a long producer and I did not have hedges. So that's the.
And we just walked through nat gas, which has been pretty quiet as of late. But then we get over to diesel. That's been a major concern as well on the input side. Again, just the reinforcing the concern that we have with the Strait of Hormuz.
Yep. Yeah, it's all about that every day. We went to bed last night where there was going to be a ceasefire. Crude oil dropped $6. Now, obviously, these people are jawboning each other, and now we're back up to $90 a barrel. I would anticipate seeing that move. You know, every 12 hours we're going to have a new reset, depending on who says what.
All right, hey Chris, quick break here. We're back with more markets. This is Market Day Report. Let's talk cattle now. We've turned red and our losses starting to deepen a little bit here. April live cattle, $137 lower, $234 even. Again, chasing cash trade right now, $235 last week, $235 the week before that, $240 the week before that. So we've been watching cash trade just pulling back, and as it does, it's moved packers back into profitability. Not to mention the fact that, we've backed up on some of the kill rates, And we have less hook space at this point. So if we're reducing the rail space, we're pulling back on the price paid for cash. It's setting things up to be at least profitable, slightly, for packers. Chris Robinson's with Robinson Ag Marketing. Did I describe that well?
Yeah, I
mean,
mean,
at least adequate.
yeah, demand continues to be in there. Again, cattle is a surrogate trade for the stock market right now, crude oil is going higher, and we had a really good bounce in feeders and fats in the past week. We're about a $15 bounce. We're a little bit lower here today as I'm speaking to you, but again, I think that's more to do with people trying to figure out what's going on with the crude oil market. One good thing that I would point out is, the stock market's up 350. It has not rolled over yet. That would be my biggest concern if we did get a bigger flush in the stock market, because again, the managed money is long all physical commodities because they think that we're going to have higher crude oil prices. So that's their hedge. So long story short, you got feeders right now and fats, both in the red today. I would anticipate continuing to see this range trade. Again, these are still relatively good prices. There's still some good hedges out there. And you're right, the packers are making money again. So we'll see what happens in the cash market as well. Everybody's watching the feeder index there. They're probably going to converge. If you look at the screen, the one thing that's green today is March feeders. They're still up because you're seeing the cash and the futures converge. So we'll see how we trade the week. I still think the biggest risk is what happens in the stock market.
Yeah, and looking at hogs right now, we get a quarterly hogs and pigs report that comes out tomorrow at 3 p.m. Okay, you mentioned stock market equities. Again, this is one day higher, one day lower, one day higher. Yesterday we were lower. Is this all contingent upon the headlines and the social media post?
I think so. And you have to remember that a year ago, last April, right, we had a big sell-off. We've rallied 45% in the S&P since then, in 11 months. The Dow Jones rallied 37% since last April. So to get a 10% correction, which is what everybody's worried about, heck, we had one the other day in the Dow. It got down to just about 10%, then backed off. The S&P has only come down about 6.5%, 7%. So there's still a possibility that we get more downside, but you have to look at where we are compared to where we were, last April. So yeah, there's some downside risk, but it's coming at all-time highs. So that's I always try to make glass half full. We probably are going to have sort of a correction here. I wouldn't be surprised if it happens. And I think that the sooner we get this, whatever's going on in Iran wrapped up, the sooner we can get back to trading, supply and demand and everything else. This situation has really had everything repriced, and that's your biggest risk, I think, moving ahead.
Okay, yeah, just looking at that 6-month chart says a lot right there. Chris, great to see you. Chris Robinson's with Robinson Ag Marketing.
All right, thank you, gentlemen.